Hey, good afternoon, everybody. If you could give me a quick sound check, please, that would be great. Good afternoon, Scotty, Matthew, Julian, and Michael. Good to see you guys. All good. Good. Yo, yo, yo. Great stuff. Glad to hear it. And I guess it's no coincidence that I flushed out the DNS this morning from the router and had a good hard reset. So I imagine that's what's done it. Yeah, I think it was the internet here. I think it was. The router hasn't been reset for, best part of the year, I should imagine. And that's usually a lot longer than I usually leave it, and I just haven't been around to it. You should always give them a reset, once every few months, I'd say. Every quarter. Yeah, let it go. Alright, so we're off to a relatively good start. We haven't really been up to too much in the markets. Frankly, we haven't really been up to much of anything at all. We got this one trade in the EU50 this morning. The portion of the move that we got was pretty much tiny in comparison to the total gains of the day so far. EU50 is currently trading up at 1.14%. This is leading the charge of the global stocks by a fair distance, to be honest. The second in the running up is the NAS 100 at 1.05%. The DAX, even though it's gained 0.75, has had a hell of a move today. It really has. Very, very nice, big, consistent move. Very deep, impulsive, corrective wave formation here as well on the run to the upside. But really, really solid. Really, really, really solid contender today. Lovely break, close, and retest of this area here as well. Beautiful breaker structure for the sort of second half of the run to the upside. And it's kind of just sat here chilling at the moment. Now, in terms of the news today, we are on Thursday, and we don't really have too much of anything going on. We have the GDP growth rate for second quarter here, coming in 3%, just a couple of ticks above the forecasted figure, and significantly 1.6% up from the prior figure of 1.4%. Very, very positive for the US economy, but it also indicates a bit of a heating economy as well. So you do have to take that into consideration. If we look at the DXY here, the DXY is appreciating that news. It's not really breaking out, and to be honest, I'm not surprised. This is not the kind of catalyst news event that would see the markets go on a wild spike as a result. But it is good. It is good news. Now, if we look over at the US stocks, as a result, we haven't really got too much volatility as a result here. A little bit of a spike up in the NAS 100 just to bring us to that previous high liquidity area up there. That's where we're currently trading at the moment. If we look up here on the daily time frame as well, we're still significantly below that previous all-time high. But if we all look here with a sort of close mark, actually I don't want to use that, scrap that. If we all take a look at this, we do appear to be in a flag formation on the daily time frame. And this could be super good for us, not only for the fact that we have a now quite nice trading margin to the next high, to the top of the flag, but also the fact that if we break out above it, then it really is full steam ahead right to that previous high area at around 2075. So we could be lining ourselves up there for some decent days in the NAS 100. Obviously, we're on Thursday today. We've only got Friday tomorrow, but next week should be very, very good for the US tech stocks. In terms of the Dow Jones here, Dow Jones is absolutely powering above. So, but based on where we are at the moment, all-time high is going to be smashed very soon. I think a couple of days ago we did get a fresh all-time high, didn't we? But this is just going to continue. I think this is going to really power on through, and we will be looking at that area sort of crushed in the next couple of trading days, I'd say. Possibly today. I think, yeah, definitely before the end of this week. That would be my bias. Looking at this area at the moment, it does make you think, could we be in for a big rejection? And that is, of course, a strong possibility. But the way these stocks are going at the moment, I just don't see it. And now that we're looking at rate cuts from the Fed, we're looking at cooling economy. I just think it's prime time. I really do, These things have been ramping up with high interest rates. You imagine when those interest rates come down, these markets are going to be firing on all cylinders. They really are. So I'm expecting longs here. And yeah, we've got that NAS 100. So we'll come back to those anyway. That's sort of a bit of a daily view of those US stocks. We'll recap on that and work out our daily trading plan over the course of the next session today. We'll look at that. Okay. Yeah. Okay. So let's get going. So first of all, let's check out oil. Now, oil has been a continued disappointment as it just keeps on trading lower and lower. It's had a bit of a bounce so far, but we're still within the remit of a no trade area. So I really want to see the market come up to this area here, get that retest, and then we can possibly look at trading the second half. Now, if there's those of you in the chat at the moment who's here, I know Nadia's not going to be here, but she probably will be watching the stream this afternoon. The only reason I call that name out is because we've just had a one-to-one session where I was explaining a few things, giving her some tips, and I was explaining that we don't want to be trading in the middle of the range like this. Now, for you, Nadia, in particular, and for everyone else as well, even though I haven't spoken to you in private about these situations, this one is different because of the size of the trading margin. Now, generally speaking, what we've been speaking about, size of the ranges, is we've got like the range high here, and we've got the range low here, and we've got the sort of small median in the middle of this area, like this. And then we've seen a number of trade ideas which have sort of been taken here for the longs, and vice versa for the shorts. We've had these sort of shorts on the other side and stuff. But even though these two are winners, the winner versus loser thing is unimportant at this stage. Even though we've been looking at these, this is not a good way to be trading. Okay, we don't want to be trading in the middle of the range. We want to be looking at the major inflection points only. However, there is a rule of thumb that when you are looking at those kinds of trades on a margin of this scale, you are okay because you have a huge distance to go. Now, ultimately, we only want to be trading with trend. At the moment, this wave here is representative of the current trend to the downside. And so therefore, if we get a decent retest of the median of this range, which, let's be fair, guys, is huge, then we want to be looking for that retest break of structure from this area and then jumping in the trade for the second half of the run down to the downside. Now, if you were to ask me, okay, Max, but what about this area in here, for example? Could I take a trade in between there and there? The answer would be an immediate and unhesitated no. We do not want to be taking any positions that far down the move. This is the median, okay, with two very nice halves to be interested in. We don't want to be taking it down there because we run the risk of a shortfall here to the downside and the market just comes back up and we get stopped out. But from this point on, we're going to get a pretty nice amount of profit in the bank before we come down to this area. If we do see a turning point and a counter trend breaker structure, you guys know what to do. You have an exit strategy in place and you jump out for a small win. And that's the plan. So UK oil at the moment, all that being said, there's no real opportunities as of yet. I'm waiting for a nice push in liquidity, and then I can lock in the pending order. Yes, we did get that yesterday at this area here at around 4 o'clock in the evening. I was not even watching oil at that point in time. I'd completely forgotten about it. But that's what I want to do, okay? That is a trade idea. So if we get a nice push into here, strong rejection, break of structure, then we can look to get into the trade idea, maybe at around 78, 75 for that relatively big short. So gold, another really nice contender. Unfortunately, one that we haven't been getting involved in. We've had a really nice couple of runs up at these highs here, really nice major inflection point at around 25, 24. But unfortunately, we just haven't been getting involved. I've been waiting for gold to push down into liquidity at around 24.84 here. Then we look at the break of structure. Then we look at our entry barrier. At this stage, this is still, to me, appearing a bit risk. But we could indeed be looking at trading these inflection points. I don't like where this one's obviously got knocked down from fundamentals more than anything. That's the reason we're taking a bit of a dip here, because the dollar's ramping up from the GDP data. But that being said, this is still a really nice inflection point to be considering for a trade. So then you'd be looking at the sort of the rejection from this area, the break of structure, and then jumping in for a long. Now, there is an actual fund idea I'm interested in, and that's this one in here. Okay, so what we're going to be looking at between these areas here, this is representative of the no man's land, so where we don't want to be sort of getting involved in any kind of trades. If the market dips down into this area, okay, and I'm just going to write this out so it's absolutely clear, no man's land. Anywhere in here is no man's land. If we go down here and then we come back up and we break structure, then I'm going to be instantaneously interested in a long from that BOS point to this high of the zone, with my stop losses 50% point between zone A and zone B here, not zone C, zone A and zone B. So that's offering us a 1 to 2.4, which is going to yield around a 0.661, 0.62% return, which is fantastic. That's what we like. Of course, if we get the breaker structure down here, I'm not going to be interested in a short, so don't even think about it. Okay, no shorts from this point on. If we go to this point on, then I'm going to be waiting for the market to dip its toes in the big pull down here, load up on the institutional cash, and then start to ramp up. And then I'll be looking for the 1 to 2.12 here, or to be fair, I may even go all in for a 1 to 6. No, I won't. Never in my lifetime would I do that. But, you know, I'll be looking for potentially something quite nice out of it. So that's the plan. So we have a long here and we have a long down here, but actually we don't have any shorts in gold available to us at the moment. Now, just so we can be absolutely clear again, so that you guys can soak in the information and learn. The reason why I don't want to be taking a short here is what? What's the reason? Can anyone tell me? Wakey, wakey. If you're at work, then you get a get out of jail free card. And if you're listening to me on headphones or whatever, that's fine. If you're not at work, Julian, because I know it's morning for you, and I want to hear an answer, please. I'm full of money. No. No. This area, why would I, look, hang on a minute, let me articulate the trade. This trade here, why would I not want to take this trade here for that 1 to 2.88? Why is that not on the cards? Why are we only looking for a long above here and a long from down there? Middle of the range. Yeah. Look left is too messy. Yes. Exactly, because there are too many technical risk factors for our risk profile. Yeah, the range thing is definitely there. That's not incorrect. But the real answer I'm looking for is because we have way too many technical risk factors. Look at what we've got here. Look at this area right in here. What are we going to do about that? And directly below it, we have an even smaller one here. Right, so this is the big one. I mean, that's a really big area of liquidity there. So we don't want to be taking that to the downside. Why then, okay, based on this information, if there's a big point of liquidity here, okay, don't worry about that one, that one's tiny. But if there's a really big point of liquidity here, why would I be happy taking a long into this point of liquidity here, but not the short? Can you explain that one? Bang on the money, Scotty D. Okay, fair enough. Yep, fair enough, Michael. Yeah, right on. And Scotty D, yep, you're bang on the money, mate. Because of the fact that the price action has gone down to this huge pot of money and is going to be trading away from it. So the power of this outweighs the power of this, which makes this more likely, more of a likely outcome. Okay, let's move on. Aussie CAD. Aussie CAD was absolutely brilliant. We got a complete and utter rinse and repeat trading opportunity out of this one. Brilliant. Absolutely brilliant. I was stoked when I saw this one. Came down, dipped its toes in the liquidity pool, perfect breaker structure, exactly the same damn trade as we took yesterday. So that's really good. At this stage though, guys, no trading opportunities for the Aussie CAD now. I'm giving it a rest. Aussie Yen, we've got some big breakouts going on here, but we're reaching a ceiling. Ceiling is here. Lots and lots of highs. Look at the size of the inflection points on this bad boy. Okay, really big inflection points. You can always tell a cash rich area because it's not just a gradual grind away from reaching an area like this. It's a big steep fall. Every time we've been up here, big steep falls. We've ground our way up, steep fall. Ground our way up, steep fall. Ground, steep. This one fundamentally driven. This area, ground. Ground along to the upside, steep. So we've seen this over and over again, and we see this all the time. And this is what makes us think, okay, lots of money in the market here. Now the fundamentals have pushed us into this point of liquidity again. What's the issue with taking a short here? The damn breaker structure point's too low, isn't it? We've got a full-bodied bar. And I actually don't like full-body bars because it means the barrier for entry is way too low. So now I have to wait for price action to range for a while at this area before we can get the decent entry to trade. And that's a problem in itself because I don't want to see price action ranging in an area like this. So for example, we come up to this area like this and we grind above, the breaker structure area is clear, really nice. We grind to the top, breaker structure area is clear, great entry. Clear, great entry. Clear, great entry. This one, impossible. And then we come right the way along to this one here. Now this one might turn into a great entry. We don't know what it's going to be like yet. We could indeed get it. So we're just going to have to sit tight and wait to see. But the Aussie Yen short is a possibility, especially when we're trading up at an area like this. The opposing view, of course, is we get a 15-minute BCR and then we look to take the trade up to the next level. But the breaker structure, if we remove, I tell you what, we could actually put a pending order in this instead because the market would have hopefully already BCR'd and we get a breaker structure above here. So my bias, if the market breaks long, is for the market to break long to here, retest from this point back down to here and break structure. Once we break structure, we can then enter the market. The target profit for this one is here. Guys, literally just give me a sec. Sorry, I think the door's gone. 2 secs. Hey, sorry about that, guys. It was the door, and then after the door, I decided to get myself a green machine. Have you guys ever had green machine? One of my favourite drinks. So nice. I need a green machine to power my market analysis. Right. So, yeah, that's where we are at the moment. Aussie M. Nice breaker structure above there. Very solid trading margin. Really pretty solid path of least resistance, to be honest, as well. So that's going to be my long idea. This is official fund business. Target profit. Stop loss where it is, 1 to 2.34. Fantastic. Now, the short, I mean, you probably say, oh yeah, it's pretty easy, right? It's pretty simple. I wouldn't be looking for anything below here. But the short doesn't come without its technical risk factors. Now, we've hit these areas a lot of times, but the technical risk factors are prevalent. We've got one that sits at around 98.30. We've got another one here, which sits at around 98.55, 98.60. And so, two relatively big ones. We're going to have to rely on the weight of the zone up here to push through there. It has done in the past, but it's done in the past quite a few times. We also need the breaker structure area. And so there is no pending order yet to be had. That one you guys can plug into your account straight away. No problem, no questions at all. This one's going to take a little bit more art or creativity, should I say. Because we need the breaker structure to be formed for us in this area before we can plug in the trade. Now, that first technical risk factor is pretty bloody close to where our entry is going to be, so it is not perfect. But that is the trade there. So that's a really healthy trade. You're looking at a 1 to 3 something. It could be a 1 to 3 to a 1 to 3.5. If the market breaks straight down without any structural point being formed and then broken, then your breaker structure level for the next trading opportunity is going to be in here. And then your entry is going to be down here. And your stop loss is going to be there. Now, who in the trading room, how are we doing for time? Okay. Who in the trading room likes this trade idea? Anyone in the trading room think that's a good trade idea? Think about what we were talking about. Yeah, okay, again, very messy. Yeah, all right, fair enough. Yeah, so I'm looking for a specific answer. Maybe I should be a little bit easier. That's fine. But the reason we do not want to take that short is explicitly because we are trading in the middle of a small range. Okay, we are not trading the UK Brent range. Look at the size of the range. Okay, pips don't matter. They are a measurement of a distance and the distance traveled in the market. But if we look at the size of the range, it's a 7,134 point range. It's ridiculous. It's a 10% range. If we look at the same thing in the AJ, we're looking at a range here, which is, it's next to nothing. High to low, 93, 0.94%. And so then if we're looking at the distance covered from the middle of the range to the floor of the range, we're really running out of room to breathe. Okay, and so the possibility of us entering a trade here before we get to the first technical risk factor is there. That's how much room in the market we've got to breathe. which is one 15-minute bar at volatility. At zero volatility, there was probably like three or four. So we don't want to be caught in this one. So in order to take the short, just to reiterate this point again, we must form the structural point here and then break the structure. As soon as that structural point's been formed, we can then get the pending order in the market, but not before. Okay, Aussie NZD. Let's just remove this. Yeah, to be honest, not really fancying that. Really, really nice move to the downside. We did a profitable trade idea in it already. Actually, hold up a moment. That is not too bad at all, is it? So that area in there would be the BOS. This area here would be the target. And that is not actually a bad trading margin at all. That's not too bad. So that's our trading margin. And the break of structure level itself would be in here. So that's a BOS level. And then our POLR for the trade is going to be between here and here, with stops at the top of that zone because the 50% point is just too ridiculous. That's actually yielding a 1 to 3. So that's not bad. Who doesn't think that trade idea is too bad? Are there any sort of concerns about this trade idea? Looks okay to you. Yeah. Yeah. No major technical risk factors. No major market fundamental catalysts. Low resistance to the move, yeah. Look left, straight up and down. Good, yeah. You're absolutely right, guys. So this is what we need to do. This is all we need to do. Find that space in every chart that you want to trade. And you're going to be looking at winning trades. You're going to look at consistency. Find this space. That's what you're looking for. Remove the noise. Remove all this stuff. You know? All this needs to go. All this needs to go. Find these areas. And we're going to be having a laugh. 60% of the time anyway. 60% of the time. Okay, so let's have a look here. Aussie dollar. We were looking at taking these, weren't we? But the margin was too small, so I'm still going to be standing by that. I'm not going to change my attitude with that one. Euro yen looks like a bloody murder scene, so no thank you. Euro NZD I was heartbroken over because we were looking short on this one via breaker structure, and God, it moved hugely. I mean, from this breaker structure point, bearing in mind I released no trade idea on this one, as you well know. 1.11% for 200 pips. 1.11% down. Fantastic move. And yeah, nowhere to be seen. There is a trading opportunity now though. We do have beautiful little structure area here. We have a little rebound there, but the next major structural point is going to be at the belly of the zone above. That's about this area in here. And so then we've got a pretty decent trading margin. That's not too bad at all. So you can look to buy the corrective. Target profit, stop loss, 1 to 1.8. Nice little idea. That one's going to be locked in, guys. I'm going to put that one in. Euro was. And this is our trade idea from this morning. Really, really unfortunate. Well, actually, it's not from this morning. It triggered this morning. This is a pending order from yesterday. And unfortunately, we've stopped a stone's throw away from the target profit before now traveling back up to around 60% of the trade. So yeah, bloody annoying. Obviously, there's no problem yet. We want to be out of the market. We want to be not exposed to this one as much as we possibly can. But yeah. Obviously, we're taking a long in the Euro NZD, so we're kind of offsetting some of the buyback risk in the Euro Oz with the Euro NZD, and I like that plan. That's a good hedge. If we drop lower on the Euro Oz, then we win the Euro Oz trade and we don't take any risk in the Euro NZD at all. And then we can remove that pending order. So from my perspective, from a risk management point of view, this is a win-win. Obviously, when I wake up tomorrow and the Euro NZD is triggered and it's lost, and then the Euro Z's bid back and it losses, and I'll have to eat my hat. But for the plan at the moment, that seems like a good one. Pound against the yen. Still grinding it out in this very, very tight range. We got the higher the range, we got the lower the range, and frankly, we haven't got much else apart from that. Pound yen is an incredibly difficult market to trade for me at the moment. I haven't had, there hasn't been any trades in the pound yen for a long time. Frankly, I'm not even surprised looking back in time. So with this one, you do have breaker structure areas. Of course, you have them all over the market, but honestly, guys, this is a really difficult one. Because even you look at any of these range opportunities, the broken structure, structural break, possibly there, for example, on that one. And this is if you are a perfect trader with that entry point, then you are going to be looking at a maximum of a 1 to 1.4. And we don't get out of bed for those. 1 to 1.5 is the bare minimum. And frankly, I never get a 1 to 1.5 anyway. I'm usually a minimum of a 1 to 1.7, I'd say. And so there's just nothing there. Not at the moment. Cable, made some trading margins, some good calls. Beautiful breaker structure point, straight down to TP, didn't take any trades. Now that we are trading here, we are looking at sort of buyback territory. Ideally, on a 15-minute chart, we would probably see this area in here as the sort of area where price action would get down to before coming up. So similar to the Aussie CAD trades that we've recently been invested in, only on the basis of the market approaching this area can we get a pending order entry for a long in cable. Anywhere, so long as this is done, breaker structure, and then we look at that TP back up at the high there. And the target profit probably where it is at the moment. It's all dependent on hitting this area. Wherever that breaker structure is, I don't know where it's going to take place, but the breaker structure has to happen after price hits this zone. And then you put your stop loss according to wherever that is. You're probably looking at a 1 to 2.5 or something on that one, I'd imagine. New Zealand yen. That's the big boy trade, isn't it? Yeah. So yeah, really nice breaker structure. Frankly though, at the moment, nothing to be said about it. NZD USD. Lovely little win on this one last night. Another really nice little trade on this one today as well. 130, obviously, just a moment ago from the GDP data. Obviously, we couldn't take that. We didn't take that, but this is looking pretty good. So what I'd be looking at from this area is a new breaker structure area being formed. So looking for a bit of a block, whatever that looks like. Maybe we'll come down a little bit deeper into this area. If we come down deeper into the zone, then this becomes the breaker structure. At the moment, this is not a breaker structure because this candlestick is still forming, but if we push lower, it will be. And then we can be looking at a fresh trade in the NZD USD, repeating yesterday's cycle entirely. Target profit, stop loss, something like that, maybe a little bit lower. Again, I don't like a high risk reward, I just like the medium. And so technical risk factor in this one, here. But that technical risk factor is fine. That's acceptable. It's acceptable because at this area we're at a 1 to 1.5. So that's an acceptable technical risk. So again, no pending order allowed yet. Wait for the market to push in, gather the money that it needs, then lock and load for the trade to the upside. USD CAD looks like a bag of shit. so don't worry yourselves about that one. And the USD yen, again, we incurred another loss yesterday. Another one. Really not been having any luck on this one at the moment. Very, very, I don't know if it's me, sloppy effort, really. I don't know. I really not entirely sure what's going on here. But yeah, not really had much luck in the USD yen as of late. Looking at this bit of price action here in hindsight, it looks like I should have done. But yeah, just not getting the calls. So no trade idea in that one either. It's been an underperformer in the fund. Okay, now let's get on to our stockaroos. So this is representative of the upper limit of the flag on the daily chart. Really nice trading margin. Very, very solid. Really nice little 15-minute level of liquidity in here as well. Perfect for breaker structure continuation. So good that you could legit put a pending order in here, even for the market open. And that's how clean it is. And so then you're looking at the entry. You're looking at the target profit, which is going to be a little bit just below that white line. You know what the candles are like. So a little bit below the white line. We're going to be looking at the high 1, high 2 for our explicit level of liquidity here. Stop loss is probably going to be about there. Nice margin below that one. And you're looking around a 1 to 3 return. So that's really, really solid, guys. Very, very nice trading opportunity there. Now for the short, a little bit different. A little bit different in the NAS because we've got this area in here, which is acting as a quote-unquote floor in the market. And we do have a technical risk factor sitting right in the middle, which it usually does. But this technical risk factor it's not a small one. It's pretty significant. Markets come up to this level once, ground, sharp drop. This one actually has risen quite sharply to it, ground along, and then ridiculous drop afterwards. Now this is market open territory or end of the US, beginning of the Asia session. So I'm not really surprised to see that kind of volatility there. So to be fair, I have to discount that. But I'm not going to discount this. And I'm not going to discount this. This is big. And so the short for the NAS 100 today, I would personally say, is risky. Which is strange if you think about it, because yesterday I didn't like the short either, and the short was massive in the NAS 100. I think what I would say is consider this no man's land, the no man's land entirely, so no trading between these two margins. If we get the break, close and retest, and a good one of this area here, then you can look at the continuation trade to a random level of liquidity below. So let's say random point A, right? So that there, for example, nice inflection point, send the market higher. I'm not going to go to this one. I think it's too optimistic. I'm not going to go for this one because that's definitely too optimistic. This one makes sense. Limit the market exposure, limit the market risk. So, entry point, break, close, retest, aggressive entry on breaker structure, target profit, stop loss, 1 to 1.93 approximately. And that'd be the short opportunity in the NAS 100. Okay, let's have a look at the Dow Jones. Let's first go to the 15. So, of course, on the Dow Jones, we've got all-time high territory, so the long is going to be incredibly long-winded. Okay, 15-minute BCR. That is the only criteria, okay, necessary, but it's a big one. So you're going to have to sit tight and watch the volatility play out in order to go long. Once we're long via the full 15-minute BCR, you're going to be looking at a fixed 1 to 2 risk-reward ratio trade. And that is literally it. That's all I've got for you. That's all-time high trading at its greatest. Okay, and we're not looking, guys, at a 1 to 2 risk-reward ratio trade idea like this. That is not what we're looking for here. Short, concise trading opportunity, 1 to 2. Something like that. After a 15-minute BCR. if we're looking short, then we've got a really nice level in here to go short from. We've got a relatively decent area to go short to. That's the trading margin for the short. Breaker structure area is, I'm going to look at this on the 1 minute chart. Breaker structure area for this one is going to be probably there. That's going to be your BOS. This one's kind of ascending, isn't it? So I'm just going to get that in the charts there. Yeah, so that's a pretty nice level, that one, isn't it? So yeah, and so long as we get the breaker structure there, we'll also be getting the break out of this area in here as well. Just to confirm that's, oh yeah, beautiful. Beautiful, okay, cool. Right, yeah, so that is going to be done with this, and then we could be looking at taking the trade down to this inflection point here, which then makes the trading margin this space. That's really healthy. So then entry, target, and finally stop loss in the middle of these two zones for a 1 to 2.3. Maybe a touch lower, to be honest. Maybe, yeah, say 1 to 2.5. Say, and that's that. That's it, guys. That's what I've got. That's the funds plan for the day. So, how are we feeling? We all feeling good? Feeling ready? Lots of trades, as always. Lots of opportunity. Scotty D is ready. Good man, good man. Well done, Michael. Yep, good man. Anyone got any questions? Anyone need anything explaining additionally? No harm in asking questions. Apart from if it's from ChatGPT, I don't want any bloody questions from that. Hey Max, can you show the Aussie trade again? Yeah. Julian, no problem at all, buddy. Can't remember which Aussie one it was now. We've got the Aussie yen. Alright, 15-minute time frame. Yeah, so that's the Aussie yen for the long. We're not doing an Aussie short on that one. And we've got the Aussie NZD, which is that one. And that's it. Yeah, that's it. Aussie NZD and the Aussie yen. Okay. Yep, no problem at all. Alright guys, well I'll wrap things up there then. I hope you've enjoyed today's session as much as I have. Let's hope we get some more winners in the bag. It is the 29th of August today. Month's end is on the Saturday, obviously no trading. So tomorrow is our last trading day of the month. And so therefore I will be pushing the hammer forward. I really will be. Because so far this month, it has been a record-breaking month by a flipping long way. I think the fund at the moment is currently at 28.95% up for the month. Based on the size of the account, that's a financial gain of £70,300 this month. Of which I've not personally made 70,300, but that is what you would make if you were trading an account of that size with these trades. So yeah, it's been freaking mind blowing. So I'm really gonna hammer it down now as well over the course of the last 48 hours to see what we can actually do. To see how it actually goes. So have a good one, guys. Good luck this afternoon. You have about 15 minutes until the US opens up. I hope it's a good one. I'm going to be right there alongside you, so let's hope it is good. And yeah, look forward to catching up with you throughout the day. So take care, guys. Good luck, trade safe, have a good one, and I'll see you then. Cheers. Bye bye.